What's up guys, welcome back to another video. Today's video is going to be very important. It's something I've never ever taught on this channel, but we're going to be moving forward with more strategies, more confluences, and more ways to learn how to trade. So let's get right into it. This video, as you guys can see by the title, it's Smt Divergence. So what Smt Divergence simply means is smart money technique, and the divergence part is where you get two different indexes or pairs and you correlate them together to solve a problem in the market. So for example, the two best things to trade or to test this Smt divergence on is Nasdaq and the S&P 500, but you can also do it for forex, which is the Euro USD and GBP USD. Those two pairs are the only two pairs that work with Smt divergence. The rest I don't really recommend doing it. But yeah, the best two things is the Nasdaq and S&P 500 or the DXY, right? So Smt divergence looks something like this. So let's say we're on Nasdaq, right? And Nasdaq chart is bullish. We're going making higher highs and higher lows, right? But then the S&P 500 is also making higher highs, higher lows, but it slowly made a reversal and a market structure shift. It made basically a lower high. So look like this, basically, okay? It made a lower high, right? Now the Nasdaq obviously made a high. The S&P didn't make a high. It closed right here, right? So what was price going to start doing? Because it lost momentum on the S&P, the S&P is going to start going down, correct? Then it's going to create a fair value gap to then retrace and enter off of, correct? That's how it usually goes. That's how a chart usually works. That's how the market usually works out. Now, because we're bearish here now, the Nasdaq has to then follow suit every single time. Every time it follows, but when the Smt divergence happens, there's a lag in the market. The market is lagging behind. So the Nasdaq is behind in price and it's behind in price action. So we don't usually wait. We basically enter as soon as we enter on ES or S&P, we enter on Nasdaq short. We're bearish on Nasdaq already before Nasdaq starts going down. It gives us the confirmation already. Then we'll start seeing Nasdaq slowly going down. Okay, that follows suit after. You know what I mean? So look how many higher highs Nasdaq has made. 1, 2, 3. Look how many higher highs S&P has made. 1, 2. 2 higher highs, because again, Nasdaq is delayed. It's behind. It's lagging. The price action isn't there yet. Okay, there's not a lot of volatility maybe in the market, or not a lot of people entering the same entries as S&P and Nasdaq. Usually that's what happens. People, investors, institutions, and people in the market would invest the same way they would as S&P or Nasdaq. Like if they put $1 million in Nasdaq, they're putting $1 million in S&P. Same, you know what I mean? Because they kind of all fall under the same company. So moving forward, same thing happens with a bearish Smt divergence. So this is what Smt divergence looks like. I'm going to show you guys an example on the chart in a second. A bearish Smt divergence looks something similar like this. So let's say Nasdaq is making lower lows and lower highs, right? And the S&P is making lower lows and lower highs until this happens, right? Obviously, a reversal is about to happen. This one goes down and then does this. Okay, so the Smt divergence happens here. You have a fair value gap you re-enter off of, and then you go back up. With here, you have a fair value gap you enter off of, and you go back up. So price would look something similar to this when it comes to an Smt divergence. It happens vice versa, by the way. The Nasdaq could be the one flowing smoothly, and the S&P could be the one flowing not so smoothly. Okay. Now here's an example on the chart. Okay, so let me remove drawings and scroll down into the chart. So on Nasdaq, whichever time you're trading in, doesn't matter what time you're trading in, this happens a lot. Okay, not all the time, but it happens a lot. And when it does happen, you can actually trade. The beauty of it is you can trade on both markets at the same time, which is amazing. Okay, so as you can see, let's say you're trading Nasdaq, right? You're going to take your line tool, and you see how price is making higher highs, higher highs, higher lows, higher highs, higher lows, until we have a consolidation here, right? Until price then swept liquidity and made a higher high. Okay, so as you can see, this curve, it's not a straight line. It's going up, slanted, because obviously I'm showing you guys that this high over here, is higher than this previous high. Now we know that liquidity has been swept and it's making higher highs, but the body of the candle didn't close. So this is where you kind of look for opposite entries, and price did become bearish for a while. What do? We tie in different confluences. So we know that the market is currently bullish. We had again, I taught this in my previous video. We had an inverse fair value gap. It got disrespected, and that is now used as a confluence. It's used as support, basically. So this inverse fair value gap gets filled in by all these candles and shoots back up. Now you can trade it that way, but again, this video is about Smt Divergence. So we're going to go to S&P and we're going to see what happened here, okay? So over here, we had a higher high and we had a lower high. NASDAQ, we had a higher high, then we had a higher high again. Okay, so we had a high, then a higher high. Over here, we had a higher high, and then we had a lower high. You see the correlation, the Smt Divergence? By the way, this is the same exact time frame. Look, 5 minute, and it says 2:55 a.m., Monday, July 29th. Over here, Monday, July 29th, 2:55 a.m. It's the same time. I'm not showing you guys different time frames or time zones. I'm showing you guys the same time, same session that happened. This is an Smt Divergence. Okay. Now, because this market is lagging, how do we decide that? We decide that based off of previous confluences. We already had an inverse fair value gap. We already had this fair value gap here, this bearish one, already got disrespected previously by these candles. This uptrend here, it closed above it. We're looking for a retracement, correct? Yeah, of course. Even this fair value gap over here got disrespected. This one right here got disrespected. Okay, and it's getting filled in, and these could be called order blocks. Honestly, this is actually an order block. It's not really an inverse fair value gap. It's actually an order block. Both of these are called are order blocks. Okay, this whole candle move down is an order block. If you guys want to learn about order blocks, I teach it in my previous videos. Go ahead and search for it. Okay. But yeah, we had a tap into the order block or inverse fair value gap, and we shot straight back up. But this happened after this happened. This reacted faster than the ES did. You see this? It reacted faster than the ES did. So that's an Smt Divergence. The market is always lagging. Or not always. The market, sometimes when it lags, it always gives you signals between the two indexes every single time. Okay, and you can base it off of whatever you guys want. In terms of how do you know how do you know which chart is the correct one, which market is the correct one, to be like, oh yeah, this is the right one, this is not the right one. You gotta see your daily bias, you gotta see your fair value gaps, you gotta fill it, you gotta see your market structure shifts, you gotta see all those stuff, your points of liquidity, your areas of point of interest, and then you make you make your decision based off of that. Okay. Pretty simple. That's what it basically is, and you can have the same way. You can have it do the same thing as bearish. So this is a bullish example. We could do bearish examples as well. I don't know if I can find one on the spot, but maybe I can probably find one on the spot. I'm not too sure. Let's see. Nothing can be found on the spot. Okay. Yeah, no. Nothing can really be found on the spot because this doesn't really happen every day, guys. It doesn't happen every single day. This happens sometimes. And when it does happen sometimes, that sometimes is very, very important to understand the Smt Divergence so you can use it to your advantage. It's basically it. Simple. Alright? This video is pretty short, but it's really important. You guys need to go ahead and watch it over and over until you understand it. All right. You know what? Actually, here is another example. All right. This is another example of an Smt Divergence. So we're looking at ES or S&P 500, and we're looking at NASDAQ. This NASDAQ price made a higher high that looks exactly like this higher high, okay? Then we created a lower high twice, actually. So over here and over here. So let's just do this, line this up, and we're gonna do this. This made a higher high, but price made a higher high over here. This high is higher than this high. What does that mean? Because we're bullish, because of other confluences and all that, we know that price, we want to go bullish. But because NASDAQ is lagging, we're going to follow the S&P 500 because it's flowing smoothly. We get that higher high formed, we get a market structure shift, obviously, and then we continue going down a little bit to raid our bottom side liquidity. In this case, we went super far down. We have no points of liquidity to even follow. Get what I mean? So we're gonna always wait for the reversal of the market before going back up. But in this case, because we're getting it, we have so many harsh or strong selling signals or selling bias, I guess. We're gonna follow NASDAQ, not the S&P. This may be a little confusing for you guys. So again, watch it over and over. Like I said, over here we get our, if we go down to the 1 minute, I'm not going to go down right now because I have to go back and find it. We get a sweep of, we get a market structure shift, and then we have a fair value gap that gets relatively tapped in by this candle. Okay, then it shoots back down, straight back down. All right, so but that's basically what SMT divergence is. It's when the market lags, and then it continue, and then you have to choose which one is the correct one to then continue trading that pair. Okay, so it doesn't matter what you're trading. You can trade the NASDAQ, you can trade the S&P. You just have to like know which one is making the actual SMT divergence. Okay, so that's basically it for this video. See ya.